All right, guys, we are here again for another video. And in today's video, I'm going to be going over a forever model trade breakdown, A plus trade setup, market maker buy model on gold. This is going to be the entire narrative build to the execution as to how I found myself to execute an A plus trade setup. So let's get right into it and hop on the charts. So starting off with blank charts like we usually do, I want to test you guys just to see if you already have the analysis prepped before I even show my annotations. So pause the video before I show my annotations on the next slide between gold on the left and silver on the right. So if you had your marked up annotations correct, you would have noticed that we are currently trading and reacting off of an hourly bullish fair value gap on gold here and an hourly bullish fair value gap on silver here. And we have SMT divergence within that tag of the fair value gap. Higher low on gold, lower low on silver. So we have step one, fair value gap tag. Step two, SMT divergence at the tag of the fair value gap with a bullish bias, trading and longing, prioritizing the stronger asset. This is classifying an A plus trade setup. Gap tag and SMT longing the stronger pair. So we are on the hourly chart. Now we're going to be going to the 5-minute for an execution to see the reaction as to how is price trading within this hourly bullish fair value gap. So let's drop to the M5 chart now to see if we could frame that execution market maker buy model initiation. So here is the 5-minute chart when price creates that SMT with silver. Now I want you to again pause the video and see if you can note anything already that I can see immediately once I open this chart and what I could potentially be waiting for. So pause the video now, mark up your annotations before I show mine on the next slide. If you can see right here, what do we have on these highlighted dots? Short-term low here, short-term low, short-term low, short-term low. All of these short-term lows get ran by what? This down close candle here runs liquidity. This big down close candle here runs all of these short-term lows and tags our hourly bullish fair value gap, and then we create SMT divergence on the next 5-minute candle. So this is the plan. We have New York AM session starting at 8 o'clock. Then we have the run of all of those resting lows. We have our plan now set. Our narrative build was framed with the bias of the hourly gap tag with the SMT, and our execution is framed once price trades higher, closing above this down close candle here. That would be our order block confirmation and our change in state delivery confirmation. And when price gets above the opening price of that down close candle, that would be our trigger and our idea to then go long when price retraces back into that candle's opening price. Now, this is the beauty of having a phenomenal, intelligent group of traders behind you that know exactly what to look for, that know exactly how you trade. And this is what happens when you build an army of people that know high probability trading conditions and know a true good trade entry model. The second that I start my live trading session in my group, 9:19, good morning message, next message, good morning, are you looking at gold, bro? 9:20 comes in. Gold, 1 hour to M5 right now. I didn't even notice it until my Discord member said it. All he needed to say was gold and then a time frame. And within just saying those two things, 1, 2, 3, 4, 5 messages, 5 little words, I know exactly what to do. And so does everyone else within the community, which is the beauty of having the most simplistic and easy entry model that anyone could ever use, and no one can tell me otherwise. If all you need to say is 2 little things and you already know what to do, it's literally smooth sailing from that point on. All I need to do is click a button. So let's see what happens. Right here is 9:15. The next candle is 9:20. We confirm that down close candle here as an order block and a change in state of delivery on this 9:15 candle. So all we need to do at this point on is put in your buy limit at the opening price of that down close candle. Stop loss goes at the candle low and target a 1 to 2 risk to reward 2937.7. Send in my execution 920. Long goal 2927.7. Stop loss 2922.2. Half risk play. We were entering on Monday. You guys already know this. If I'm taking a trade on Monday, it's either a half risk or it's traded on evaluation. Now, I'm in the trade here, and let's see exactly what happens and how we play out. Boom, as simple as it was with the narrative build and the execution. Price tags us in here. We have a little deeper retracement, tags this overlapping bearish and bullish fair value gap within that down close candle. And we have a bounce directly to our 1 hour external range high, doing a 1 hour IRL to ERL run. Clean, A+, forever model, execution, narrative, and entry. Here is my execution at the down close candle, and here is my take profit with my P&L. You guys see the same process repeat every single week. Copy and paste. There's nothing different. No secret sauce. I'm already giving it to you all for free. All you need to do is replicate the couple of steps and you'll be fine. But this is the beauty of having a community and building a model that is just so easy to replicate. And if you put in the time and you see the consistency of how the same process repeats over and over and over again, you're going to have full-blown confidence in every single execution that you take when you are able to follow specific rules to an entry model. But again, like always, I hope you enjoyed the video. I hope you learned something. Try and mimic this, execute it in live time, back test it, forward test it, whatever you need to do to gain execution confidence. But if you have any questions, drop it in the comments below, and I will see you guys for the next upload. Good luck and good trading for the rest of the week, everybody.